Hi, this is Orange County Executive Steve Neuhaus. This is my first podcast where I'm actually going to be sitting with a guest. We're going to be doing this in the future. We're going to be bringing in all sorts of people that I think have stories to tell that are important to you and help you, your business, your families. So my first guest, Gus Scocco, who is an awesome friend of mine. He knows everything about the economy. He's the guy that I go to, and we have the most intellectual and inspiring conversations. We talk about not only the economy, but the future for our kids. Where should we be investing? Where should we be? How do you plan for the future? Where are we? Is the economy, are we going back to 2008? So with that, Gus, welcome.
Thanks for having me.
It was awesome to have you.
Pleasure.
And we've always had these dialogues like we're having right now. We're going to start, and for the audience, and I think they'd be, as county executive, I get put with people of your caliber, with your knowledge, and I want to share that, and that's where this whole inspiration came from. So with that, so we can talk a little bit about yourself. So tell us about yourself. I know some of my staff said we need to talk about your prior baseball career, but just tell a little bit people your background, family, where you're from, what you do.
Born in Brooklyn, raised on Long Island. Been up here about 7 years. I still have a home on Long Island, so I'm back and forth. I have a wonderful wife, Lena, and 2 great kids. I'm 60 years old, and I feel like I'm still 21, but I've been doing this for 35 years. I went through school. I went to Adelphi University on a baseball scholarship, and got to play Division II baseball, played at a pretty high level. Cincinnati Reds invited me to spring training. Couldn't hit the curveball, that's why I'm here. But it's been a great experience, wouldn't change a thing. I've been running Hudson Valley Investment Advisors for 7 years. I started out doing what's called institutional investing. So that's investing for endowments, corporations, not-for-profits, pension plans, and then moved over and started doing high net worth. So I do a combination of things like that. And our team here, why we're a little bit different at Hudson Valley, is that we still do the research here. So most of the people that you'll meet that are financial advisors and people of that caliber, they're great, but they're getting information from somebody in the city or from somebody in Boston. So we actually talk to the companies, we look at economic data. We're actually members of the Economics Club in New York, so we get to see people that range from presidents of the United States, heads and dignitaries from different countries. And we get this wealth of information, so I call it a mosaic of information. And then we use that to kind of formulate where we are, where we think we're going, and what the future might be.
So you're not just reading reports; you're actually meeting with the decision makers that are in charge of these trends and that we're seeing today. So this being the first one, I thought the most important thing on families' minds are the economy.
Right.
Where are we? Do you think that, and you and I was just recently deployed in Europe, you're constantly sending me messages, hey, check this out, read this, look at this, just completely on top of things. What is your prognosis of the state of the economy? And I know you're not Nostradamus, but give us a little inkling of what you think the future is.
Well, again, I'm going to take a step back. So where were we? So we ended up being in COVID. And right then and there, you ended up having one of the deepest recessions. But because of the forward thinking of the prior administration, they ended up putting a lot of money into the economy, and it was good because what they ended up doing was they supported families, businesses. Otherwise, we would have had a depression. So that money's ended up getting deployed, kept the economy afloat. We have a $22 trillion economy. We put $5.5 trillion to work. So that was about the equivalent of a quarter. So between that and businesses that were able to survive and move forward, it supported everything to the point that we got kind of started again. I'm an older guy, so I remember having a Volkswagen Bug. Imagine if you ended up having the starter broken. We actually pushed the Bug until the starter, with the engine kicked in. Yeah, you put the clutch in and it worked. So we went from there to having too much demand and not enough supply because we closed down everything. You're a logistics guy. They closed down all the supply chains. So it's not flipping a switch, it's a process, and that's what we're working through, and things got backed up on the ports, and they're actually working their way through. There's still some issues, but we're getting back to, say, 75% normality with that.
So like a year ago, you going into that logistics supply chain, we talked about the amount of ships that were off the coast of California, waiting to be offloaded, but there was just not enough to get that pipeline open. Mm-hmm. That's improved since the last year?
Quite a bit. You ended up moving a lot of things through, and if we do slow down, you'll get more stuff that ends up coming through. There's a couple of, I'm not going to get into it, it's in the weeds, a couple of problems with truckers out in California right now, but the ports on the East Coast, a lot of things have been moved to because they've dredged the ports. So New York, I think it's Norfolk and one other port, Charleston, that have been dredged. So a lot of these, you got to remember, the ships that are used today for containers are the size of the Empire State Building turned on its side.
Yeah.
So they're quite large, but they can get them through the Panama Canal, and it takes a little bit longer, but you're getting able to get closer to where they're supposed to go.
So long term, those problems have been fixed, or they're at least improved.
Alleviated,
okay.
Yeah. There's still some issues, and it's not like this cohesive, supply chain. It's really a web, right? And
right.
If you have one part that goes down, you have issues. So there were always alternatives, and that's coming back.
So I've been around the block a little bit with this, and I've seen when we do these hiring job fairs, right, all over the county and other places. And by the way, this is meant for Orange County, but I think this is going to be equally beneficial to anybody in this country that listens to this in your remarks. I've seen these job fairs where there's a lot of employers, not enough employees.
Right.
And we've had the opposite of that, but now we're back to where I have a lot of employers looking for employees that demand for the workforce. How does that improve itself?
Two things. Number one, you end up having a COVID emergency. It was just extended. There's 70 million people that were prior to COVID hitting that were on the, we'll call it, that were taking benefits. It ended up increasing to 90. So those individuals are able to get food stamps, a whole host of stuff to support them. But once that ends, those people have to go out and really find jobs.
Is it time for the government to throttle back those benefits and get people back to work?
This is the lowest employment rate we've ever had.
Yeah.
So, I mean, if you're not going to do it now, when are you going to do it?
Right.
It's really, I mean, we're past COVID. I'm not saying that it's something you shouldn't be, concerned about, but it's really a bad cold at this point, for the most part, unless you have some sort of ancillary, problem.
Yeah.
But for the most part, you're looking at people that, if you're getting it, it's not as severe and it's treatable. So with that being said, there's a availability for more workers.
I just came back from 2 big military operations in the last 6 months, one in Europe, one in the Pacific, and COVID impacted both of them. I think I've had it both when I was there as well, but you're right. And we were pretty much pushed to work through it unless there were significant issues, and it was cold symptoms. So that being said, the unemployment being so low, my economic team, we say that the people that aren't working don't want to work. So what does that mean for the employers right now that are struggling to fill jobs? It means that they're going to have to continue to pay more and offer better packages in order to attract people to fill those labor gaps, or what do they do?
Well, I think that you're going to have a couple of things. You're all going to have more people coming back to the roles, and you also have to remember you had 3 million people that retired that were 65 plus. A lot of those people are coming back. 401k levels have come down. And those individuals also, it's 40 hours a week. That's a big number of hours to make up. So a lot of those individuals are coming back. So you have more people, especially toward year end, that I would think you're going to see, looking for employment.
So this is pretty much like our breakfast and lunch meetings right now. So you mentioned retirements, 401ks. People have been panicking. You see their portfolios starting to suffer.
Right.
What do you tell them? Is it time for them to get their cash and put it in a sock and hide it under their bed? Is it time for them to now get back to work because their portfolio won't be as robust as they anticipated it to be? Or I know you can't predict everything in the future, but what do you say to those folks?
Well, I'll look at the last 100 years. What you end up doing is it depends on what your time frame is. So I make a decision today, it's going to affect me for years, right? So what we do is we're making and trying to build value over a long period of time. So if anybody walks away with anything, this is important. There's something called a rule of 72. So if you divide a rate of return, say it's 8% into 72, it'll take you 9 years to double whatever you have. So with that as a point in time, if you're retiring within the next couple of years, you want to build up a little bit of a cash reserve, and you should be in bonds. That's number one. We're talking about a higher percentage of bonds than somebody. If you got 40, 30, 20 years to go, you have a lot of time that you can make up if you have a downtick.
To do something more risky.
Yeah, more or less. So you want to buy stocks. Generally have a higher rate of return, but they have more fluctuation in terms of the values that come back and forth. But it's like anything else. The stock market has gone down. However, if you're looking out 18 to 24 months, we'll use oil as an example. 2 years ago, you couldn't give it away, and today you can't buy it. And it's the same thing if I'm looking at, it's not a piece of paper, we're looking at companies. So if I look at Starbucks, it's not going out of business. It got impacted because of what's happening in housing, people not going back to work. And a big part of their revenue stream is people that buy breakfast and buying their coffee throughout the day parts. Now all of a sudden you're getting back to a period where people are coming back to work. It'll start layering in, but their revenue should start to improve over time. And I'm not saying the stock's going to go up because of it, but there's a better opportunity as you move forward with them than you did today. So if you're getting back to your original question, the values should hold in here. We might have another 5 or 10% downside, but you're betting on America when you bet on these companies. So you're looking out into the future. It should be higher or have an upward bias than what you have today.
So that being said, let's get into some of these other side issues as well. I'm definitely, I'm watching what Amazon's doing. They're buying these crazy patents out there. I don't know if you've been following them, but underwater delivery, aerial unmanned delivery vehicles. Mm-hmm. Jeff Bezos, when he left, said that he thought that they would have problems in 5 years. You see Elon Musk doing all sorts of, there's a lot of aggressive investments going on out there.
Right.
So you are, despite these massive pressure from global competition, your confidence in American, innovativeness and the ability to weather these economic storms still at the top?
Oh yeah, of course. I mean, think of it. Most of the innovation happens here. If you're looking at, I'll use a couple of examples. The last 9 Nobel Prize winners here from the United States, 8 of them were either immigrants or people that were first generation.
That's great.
Okay, and we have probably the most robust immigration policy. That's number one. There's always things that are happening. We end up going to see conferences, different companies at conferences. So we'll talk about something as mundane as having a landscaping business. Can't find employees. Guess what? Lawn Boy, which is a division of Black & Decker, is coming out with, if you have the Roomba in your home that vacuums, carpets, I don't, but if you use that technology, they actually are using it with lawnmowers. You'll see it in the next year or two, that your local landscaper can come out with 5 lawnmowers, drop them off, and they actually cut the grass perfectly up into the wherever the property line is.
I've seen a couple of prototypes at BOCES right now.
Okay.
They're manned.
Yeah.
But once you can put that perimeter on there, they'll be automatic.
You got it. So now you can run 5 or 6 at a time, and you don't need as much labor. So, and by the way, right here in Orange County, you have Presidential Container. I think we've spoken about this.
Yeah.
So, here's a company, they were looking for a couple of hundred employees. They couldn't find them. So they ended up using technology. Today, they're one of the largest box manufacturers in the United States, and their containers, they have 0 carbon footprint. They actually can print on the box. Why is that important? They actually print the instructions on the inside. Takes away the need for someone to put anything in that box. And you don't need bubble wrap or things like that. They can make the tolerances so tight, but it's all computer aided. So now you're hiring somebody that has or you're training somebody that's a technician, as opposed to just a laborer.
So these big companies like Amazon and Tesla, the big corporations, the Walmarts, the ones that actually did, some of them did very well during COVID,
right,
because they were the place to get goods that you needed. Majority of the country is small business.
Right.
Is the opportunity for small business still like in the stratosphere, or are they now limited because of this new high-tech world that we're going into or living in?
Well, I think one of the things you got to look at is right now we're doing a podcast, right? You wouldn't have been able to do this 5 years ago just because of the cost. It keeps coming down, and you get more and more technology that's lower cost. It's being able to implement it and having an idea that works. So as an example, we know somebody that's in the trucking field. They ended up taking iPods and they put them in iPads, putting them into the cabins, and they had software engineers, the group of guys, 3 employees. Today they have 1,200 employees out in Southern California. They're probably worth about $1 billion, but everything in trucking runs through their system now. And that was 7 years ago. So if you have an idea and you have an end market, and there's no possibilities that are beyond anybody's means. It's just the only way that you don't get there is either you stop or you die trying.
So let's transition, and this is great because this is even there's no notes here. This is just a dialogue. Let's talk about energy.
Okay.
The energy, I think we're kind of in a self-induced problem, as well as coming back from Europe. We can talk about food as well, because Ukraine was top 10 producer of grain. They're now off the market. It's directly impacting Europe and, more importantly, Africa, but also has an impact on the world. And we have great resources in this country, not only land, but we also have water.
That's right.
Which a lot of these places don't. Before we get into energy, do you see us starting to change and getting back into not only making more stuff, which I think we're starting to do in this country?
Yes, without a doubt.
Do you think we're going to start growing stuff to start exporting more than we have now because of these?
We actually are we can self-feed our group. Our population, we export more than anybody.
Yep.
And that'll only continue. So just as an example, when you talk about technology, if you look at farming, actually you don't have as many farmers. There's all this automated equipment. You actually have tolerances how much fertilizer needs to go down. It's all run from satellites, and it's really all digitized. So that will only increase the amount of
productivity.
It's going to just continue to grow and increase. And then you have aquaponics, I believe is how you pronounce it. So if I go to Whole Foods in Brooklyn, most of the stuff's grown on the roof, which is kind of odd to me, but it's one of those things where we actually will figure out a way. You give Americans enough time, they will find a way to have it happen. In terms of the energy, we can basically support, probably with natural gas, a good chunk of the world. We could easily get Europe. The problem we have isn't the drilling, it's what's called right of way. So it's being able to get, if we end up hitting a gusher right here in this office, we can't get it from point A to point B.
Yeah.
You need to have it tied into a pipeline, and right now they're not issuing any permits. So that's one of the issues that we have, and that would help us in terms of helping Europe.
I get worried. I talked to one of my friends out in California, and they operate at night because it's cheaper rates. I mean, that's how much problems they have.
Yes.
You hear about rolling blackouts, and we're concerned about the future of energy in New York State. The Obama administration was pushing natural gas. Those approvals for natural gas, and I'm not saying that's the right or wrong thing, but they have pushed industries like nuclear out of business here. And then at the same time, natural gas facilities are not getting the permits and the love. And I consider myself, I'm not one of these guys that everybody says they're environmentalists. I am an outdoor person, and I believe in the environment, and I believe, and I've seen the damages done from poor decisions in the past. Is there an ability, and what is the future for us with energy independence? Is the price at the pump right now related to poor decisions in the United States, or is it a combination of things, global supply and demand, and other aspects like warfare? Why are we here? Where are we right now, and how do we get here, and how do we get out of it, energy-wise?
We were actually the swing producer. They call that the swing producer because we could actually push up or push down the amount of oil that's produced. We're still producing 1 million barrels less than we were in 19. Okay, so we can actually produce a lot more. The problem is you can't get the permitting, you can't get, really the government has become toxic in terms of, that's a bad term, but toxic in terms of wanting to produce more carbon. So natural gas was instituted in a bigger way, probably in the 90s. So from 94 to now, we actually have doubled the economy, but our carbon footprint is not much larger, and that's because of switching from coal to natural gas. Well, let's look at Germany. They can't get natural gas, so what are they doing? They're going back to coal.
Yeah.
In a lot of instances. China is one of the largest users of coal. If we were able to export this, we actually would reduce the carbon footprint across the world. So that's first and foremost. Second thing, you talked about nuclear. France,
it's all nuclear.
It's all nuclear, and the problem is it's a football because everyone thinks 3 Mile Island. But you end up having these new reactors. You can fly into them with a plane and they will not destroy it. They're water reactors. There's 3 levels of cover, and they could run for almost indefinitely. There are ways around this. It's just you have to have the political fortitude to have it make sense and work. But you have, I was told a long time ago, a goal without a plan is just a dream. You just can't turn everything off and expect, well, how come the electricity is not working? And you talked about blackouts. California basically limited a lot of things that caused rolling blackouts, and Texas, because they went to nuclear is one thing, but if you're going with solar and wind, the problem you have is if it's not windy and it's not sunny, you
get a problem.
Right. So because we don't have any technology that allows us to hold on to the energy that's produced. So once you get battery technology, and that's why everyone gets hyper about Tesla, because the battery technology will solve some of the problems. But sorry for the long-winded answer, we end up having the states that were having rolling blackouts, the ones that surround them now have similar types of laws on the books. So you're going to see mass this summer, toward the end of the summer, when it gets really hot, you're going to see mass blackouts. throughout California and the surrounding states, Oregon, Nevada, and some of the others.
So going forward, when you look at the future, is there a balance where you can be environmentally friendly and not, and at the same time improving those pipelines that are now, and at the same time, how do you get that product to the customer, which is a logistical problem for natural gas? The same thing with Amazon said, the final mile, right?
That's
You've
right.
heard their thing, the final mile of delivering that product to your house is their most stressful part, and it involves the most complication, which is shocking. But how is there technology out there that is environmentally friendly, but that will improve it if they get the green light on it?
You're going to end up having things that we're not even thinking about right now that'll end up reducing the amount of carbon we use. The problem is you just can't turn off what we have now. It might force the hand of people, but it'll ruin the economy. What you want to do is put in a plan that natural gas is really a transition fuel. So it's the least carbon in terms of polluting the air, and it produces, I think it's 90% of the energy generation, and it's something like 5% of the carbon emissions. So you can use that for anywhere from a 30 to 40 year period, and as you're doing that, bring in other types of technology that even reduce things even more. But nuclear should be a part of that.
Right.
Because you have it, why not use it?
So I give a lot of college and high school graduation speeches, and I talk about leadership and not quitting and some of those advice. What do you give advice to young men and women right now that are looking at career fields? You obviously tell people to follow their dreams, but they say that a person graduating college today will have 3 completely different careers in their lifetime because technology is changing so much. What do you tell them to make sure that they stay on the edge, no matter what industry they go into?
Well, I think you really have to be technology savvy. That's number one. Whether it's, filming this is all digital, right? Understanding what a company's trying to do because it's becoming more digitized. And then lastly, productivity has to improve. We don't have the population to expand at the levels that we have. So more and more technology is being used. So we use the example of presidential container. I think they end up producing 5 times as much with the same number of employees. And it's all technology driven. If I look at a company that produces insulin pads, it's called Insulet. It's in Springfield, Massachusetts. They took over an old Pepsi facility. It's all technology based. They produce 4 times as much as they did in China at a lower cost, but it's all technology driven. That's more and more of the things you're going to see. So if you're a young person, understand computers, you might want to take a computer science minor, but always, look to kind of gravitate toward that, but also take classes after your graduation that are in that area. And you can also look at, there's online courses that help you at least with the understanding of, the digitization of the world and, how to be part of it.
And that's impacting me, and probably you too. We're close in age.
Without a doubt.
Because I remember typing classes in high school. That was the big thing.
Right.
And now your phones can do everything that was on the space shuttle. You can do one average cell phone that's out there right now.
Right.
When you look at America and our place in the world, I worry about military stuff. I worry about what the Russians are doing. I worry about what the Chinese are doing. Where do you see us, and what goes through your mind? Are you concerned about our economic place in the world 10 years out? You said you had 2 children, because that's what people with kids right now focus on, really one thing. It's the future, and how is it going to look for their kids? How does it look for you in the future, for your kids?
If I'm looking at where my kids are, America always is a place that has innovation. And just keep that in mind, right? It's constantly changing, but if we went back 20 years, if you were at Polaroid or you were at Kodak, or you were somebody that worked at an old line manufacturer, think of it, Kodak came up with the digital camera. They didn't pursue it because it would cannibalize their old business. They're no longer in business, right? So think of that along different industry lines. And there's companies that are here today that are huge that had nothing going back 10, 15 years ago. So if I'm a young person and I'm looking at the world, the US is probably one of the best places to be because of the innovation. A lot of things that are happening over time will actually gravitate more toward here because there's still opportunity and you do have the innovation. And if I'm looking at where our place in the world, so to speak, we're going to end up having, globalization was the big thing for the last 25 years. You're going to end up having localization. So what do I mean by that? You end up having supply lines that are only going to be in the United States or in North America. So Mexico is going to become a bigger part of our manufacturing. You're going to bring manufacturing back here. You're going to also bring back a lot of the stuff that's, we'll call it brain driven. So the design, all of that stuff is going to be housed here. And you're also going to have maybe another one that's in Asia and another one that's in Europe, but it's all going to be localized. And because of the cost of technology continually coming down, you'll end up seeing that more and more small batch operations are put in place. And you'll be able to produce a lot of things that you normally couldn't. So we're looking at a magazine right here. You're going to end up having, small magazine batches or books or, well, I guess we're old, maybe we won't have books. Yeah. But we're looking at, you're going to end up having smaller and smaller manufacturing capabilities.
So that regionalization, if you will, of the economies, like you're saying, Asia, maybe North America, that will protect us from being, you think so you're not a scholar or somebody that subscribes to the thing that we're going to get passed. Like China's going to pass us, we're on a highway, and they're going to be waving to us as they go by and take over us with all sorts of parts of society. You don't feel that way?
No, we're dynamic. We actually have what's called soft power. So if you're not familiar with soft power, we do different things. So if we're looking at scholarships that we bring people in from overseas, they get educated and go back home. In terms of how we're projected, we always look at the rule of law. If you're in China and you're a company, you basically don't know what your rights are. The reason why the stocks in China have done poorly over the last 12 months is now the government's getting involved and telling them what they have to do. Where here we might yell and complain, about government once in a while, but for the most part, we're left alone, right? We can do what we want, make some changes. There might be regulations that come in play, but other parts of the world, that's not the case. So you have the rule of law. You know that if I sign a contract, that you're going to follow through on it, and that if there's some sort of a problem, that there's remedies through courts. If we look at employees and flexibility, you have a great labor staff and a labor pool, and we allow immigration, and there's also the need that we don't have roadblocks, so we don't have people that'll put up through some sort of a political will that they do not let smaller companies get involved. It's really more or less competition begets more competition. So once you have that go away, then you have a problem.
Gus, what am I missing? What are we not talking about that people are, your clients that call you up and call you in a panic, what are they asking you? Are we missing anything? Are they saying, should we panic about the pumps, or should we panic about real estate prices? Do you see those coming back down? I mean, we're on an all-time high. You can't buy anything. If you could sell your house, you better have a plan that you've already bought another place, because you're not going to be able to afford another one. Do you see those numbers going down?
There's a lot of questions in that, but I'm going to just say a couple of things. We've passed peak inflation. It's going to come down, but not back to where we were in 2019. And we're not going to have the economy we had in 2019. It's going to be a different economy. So
weaker or stronger?
Stronger, but different.
Okay.
So first and foremost, if I look at futures prices, because that's basically making a look at what people are trying to hedge out into the future on the Chicago Merc, gas will be about $4 to $4.25 in about 6 to 8 weeks. And the only reason I know that is because I can look at the futures markets, and those are active, what are called commercial traders that are hedging themselves. So that's first and foremost. We're past the worst part of inflation. You might have one more hot read, they call them, and it's because of real estate. Remember a year ago that if you put a house on the market, it sold in a day, and it sold for 20% more.
Yeah.
Then you went out 4 months ago, those premiums started to reduce, if not even be there, and the houses stay on the market like 7 weeks. There's not enough homes, because during COVID, we ended up probably using about 350,000 houses got bought that were just waiting around. So that's first and foremost. So you have a limited amount of homes. You have the largest population of 33-year-olds coming into the market for the next 10 years. That's when you buy your first home. Okay, so you have the largest demand. You have the least amount of homes, and they're playing catch-up right now. So I think if you look out a couple of months, you'll see at least more homes on the market, and prices have gotten to the point where consumers are pushing back. Sorry.
So just one thing on that, I worry about people buying at such a high price, and then the value goes down, and then they get underwater. Just like we saw in 2008, you don't see that problem like that coming to that magnitude right now.
2008 was a unique circumstance because you could put leverage on top of leverage. When we ended up having the 2008 period pass us, the government went back, and they actually did put things in place that limited the amount you could borrow, the ways that banks can actually approach things. And right now, the balance sheets of individuals and financial companies, banks right now are in the best financial shape they've ever been. They have the least amount of leverage, and they're doing well. If you're a consumer, you probably have the best balance sheet you've had in 25 years. If you're, if you're looking at debt that's outstanding, it's only 6%. It usually runs somewhere between 8 and 12. So everything, if you're looking at the whole worldwide economy, we're the best house on a bad block right now.
Great. Raising interest rates, good decision or bad decision?
They had to, because
To slow
the economy.
Yeah.
This was a different economic environment. It was led by demand, and there wasn't enough supply. We talked about it before.
Yeah.
All of the logistics and the companies that were closed down for a number of months. With that being said, this is similar to World War II, coming out of World War II. What do I mean by that? We ended up having people that basically were working on the war effort. So you built tanks, not Dodges, right? So with that happening, you ended up having to slow things down, because soldiers came back full of money and they wanted to buy things. They couldn't buy a car. You couldn't buy a washing machine. And you can look this up on Google. CPI hit 22%, right? We're complaining about 9%, but they hit 22%. The Federal Reserve then ended up slowing the economy by raising rates. They did the same thing right now. So you have a choice. Either you could have inflation continue, or you stop it, but you have to slow the economy down, and that's what the Fed's choosing right now.
Gus, what am I missing that we should be sharing with the public?
I think that you're in the best place in the world in terms of the United States. Orange County is going to see a lot of growth, and there's a couple of different things that are going on. There's a need for manufacturing space and a need for warehousing, and both of those things, in terms of land and availability, and where the proximity to New York and the interstate highway system between 84 and the New York State Thruway.
The Golden Triangle.
You're basically it. We're here.
Gus, thanks for being with me today. You're the best.
Steve.
And thanks for listening, folks. And we're going to continue to have this type of quality on in next month as well, and months after. So, Gus, thanks for being here.
Thank you, Steve.
Thank you, folks.